I'm here this afternoon with David Uduanu, the chairman of the Pension Fund Operators Association of Nigeria, as well as the managing director of Pensions Alliance. Dave obviously has very good, very specific knowledge of the Nigerian pension fund industry, but he also has a very, very good overview of the Sub-Saharan market for pension funds in general and the interest in private equity in that market. So we're going to ask a few questions about that subject today. Dave, what is the current state of the market for pension funds in Sub-Saharan Africa? How big is the market? How's it growing?
The market in Sub-Saharan Africa is 320 billion. A lot of that money is in South Africa, which is about 260 billion.
So a very big proportion.
Very big proportion, and Nigeria is about 20 billion. Outside South Africa, the market is growing about 25% per annum. South Africa is growing about 15% per annum.
Wow.
But the fastest growing market is Nigeria, which is growing at about 30% per annum. And the growth is driven by regulation and by reforms that has transited most pension funds from defined benefit schemes to defined contributory schemes.
So at that rate, presumably over the next 10 years, we're going to see a very significant increase in the assets for private equity.
Yes. Pension funds, at the way they are growing, will result in something like $1 trillion in assets under management. Currently, African private equity market is a $30 billion market. Our market is projected to grow to $100 billion by the turn of the decade on the back of increased allocation to private equity.
Okay, and so how much of that money is allocated to private equity nowadays?
Well, in South Africa, it's about 5%, but outside South Africa, it's less than 1%. In Nigeria, for instance, it's about 0.05%, and similar to Kenya, to Botswana, and to Namibia and Zambia. But we are seeing increased regulatory allocation of up to 5% in this market, which we believe will be taken up by the growth of private equity in Africa, and 10% in South Africa on the back of Regulation 28.
And so that 5% in South Africa today, is that invested mostly into domestic private equity, or is there an international appetite as well?
The bulk of it is invested in domestic private equity, but there's just been a new regulation that allows another 5% to be invested in private equity and other opportunities in Africa outside South Africa.
Okay. And how is that private equity allocation fit within the overall asset allocation for African pension funds?
Well, African pension funds are mostly allocated to fixed income securities. Anywhere close to 50% of that is allocated to fixed income securities. Private equity is still a very low allocation, and that is because it's a new asset class, knowledge base is growing, and the continent is just catching up with the wave of private equity as has happened in other parts of the world. We see that allocation changing over time.
And so what do you think the prospects are for private equity in 10 years' time in Africa?
Well, we believe that private equity in Africa will triple over the next 10 years from $30 billion to $100 billion on the back of three things. The huge pension fund is stretching the absorptive capacity of the capital markets in Africa, which is shallow. Number one. Number two, there's a lot of push to increase allocation to private equity through initiative of conferences like SuperReturn, Africa, and other private equity bodies. And lastly, the developmental and impact story of private equity is compelling to African government as it helps finance growing companies and create jobs for the teeming population of these countries.
Well, that's a great outlook. Thank you very much for your part in helping ensure that positive outlook.
Thank you.
Thank you.